Hey, Nick Inman from VolumeProfileTrader.com on Tuesday, September 11th, 9/11, obviously. So first of all, thoughts and prayers goes out to the families. Um, but as far as the market's concerned, we saw a late day sell-off in equities. Let's get into the hourly chart so we can see. So equities first, they gapped open off of yesterday's close, basically yesterday's sell-off, and basically we rolled over today. So as far as a target, 1428 or so on the downside looks pretty good. It looks pretty likely also. So just keep that in mind. Um, we are waiting for the Fed, and that's, going to happen soon. Thursday, 12:30, I think, is when that starts rolling out as far as the news flow on the Fed. So I recommend being around your computer on Thursday if you can, especially if you like to day trade or perhaps swing trade, just because there should be an opportunity. So I'm just going to kind of go into quick detail on what I did today. The first thing, which was towards the latter half of the day, it was actually like the last 30 minutes or so, I bought 143 puts on SPY. And the reason why was because I thought, we could easily see a pullback, even if it's to last month's value rate high. That's probably pretty likely, and you don't necessarily want to be on the wrong side of that. So, I'm staying long, but I'm being aware of this. So I bought 143 puts on SPY. On GLD, I thought about lowering my exposure as far as my protection. My protection basically covers me down to this stop level here, this trailing stop level, a little higher. I was thinking about taking half off for a really small loss, but I went ahead and held it on because I figured if gold sells off on Thursday for whatever the Fed says, I'm going to be happy that I kept that position on. So, and that's kind of how I thought of it. So going from there, we're going to stay with the position and continue to ride that. Wells Fargo, this was a position that I initiated today. And the idea is that, okay, I see what's going on here. Consolidation for a long time, point of control for the year up at these levels. I see that. So what I did was I bought the 35 by 37 October call spread for 57 cents each, I think. I think that was the price. And the reason why I did that was because, let me give you an example of what happened, when the point of control was up here for another name. So I'm going to type in Home Depot, if I can. And you kind of see something similar. What we saw in Home Depot was point of control for the year form up here. We saw new 52-week high breakout, and then a pullback to the point of control, to the moving average, and then a continuation higher. So the breakout was basically a fake out, a test, and then a real breakout. What do we have on Wells Fargo? Well, we have new 52-week highs, the test of the point of control with the moving average. I'm just saying, keep an eye on it. So for 57 cents to make $2, I think that's a pretty good risk reward. I wouldn't risk more than, say, 30 cents per spread, so a little more than 50%. But it just keeps it in perspective. And what you ultimately do not want is for Wells Fargo to drop below, say, 33.70. If it drops below that, then I would take off the trade. But from where I bought and where it closed, I think it was down about 10 cents. So it dropped a little bit, but nothing too much to worry about. Keep an eye on Southern. Just back at the point of control for the year. Look for a bounce. Look to maybe add to the position. That's, I'm going to point out, we'll have to wait and see. But, right here, right now, off the SMA, off of the point of control, this looks pretty good. Only if you do get a bounce. Now, there's another way to look at it. Let me zoom back in here. And that's, once we got back into this value area, it's been resistance. And you just have to be aware of that. 3 days down, I would look for a bounce tomorrow. So just kind of pointing that out there on Southern. If we don't get the bounce, if say 45 breaks, then you want to get out of this position. Reassess, maybe try to get in at lower levels or scale down on your position. But if you did take this, let it work. It's not down a lot at all. But, if it shows you that it wants to go lower, then let it go lower, but without you. So, really, Coke, I do own some shares in this, and then I'm short some $38.75 calls. I know that's a weird strike, but I collected 26 cents or so for them last week, and it's just a longer term position. Those calls are barely worth anything anymore. I remember last week we flipped some calls off of these lows for almost 100% gains. I remember I didn't get 100%, but I think it almost traded to 100%. So just wanted to point that out there. And really, the silver thing, that's fine. Just kind of look for a pullback. My position in silver has gotten smaller. I sold it it wasn't recently, but I did hedge up on some leaps by selling some out of the money calls against them. But I want to stay involved to the long side. Just realize that it could be a little bit of a volatile week in the metals because of Bernanke and the FOMC meeting. The dollar back into this big high volume area here. Respect it, realize what it is, and on the opposite side, the euro creeping up on this high volume area. Not quite there yet, but we've seen a great reversal off of 120. We've seen a great reversal off of 84.25. Just realize what it is. We called this move, though, in the dollar, and you can see it all started with the failure off of July's point of control in August, and then in August we consolidated basically at the value area. Here, I'll show you. We'll do it like this. Bear with me. Okay, this will present it better and more clear. So the point of control for July, resistance. Then we have a high volume area here. What is it in August? Resistance. What happens? We have a series of higher lows, and it breaks down, doesn't retest. Value area high is resistance so far in September. What I would be expecting? A snapback. That's just how I perceive it. We'll have to wait and see, but you are getting to levels where it's going to be interesting for a bounce. For example, April's point of control. Here we are. Not saying that it's going to bounce at these levels, but just realize what it is. We're extended to the downside. You'll probably see some type of retracement. So don't be surprised if the market takes it on the head, whatever the Fed says, because of how the price action is. Like gold, point of control for the month of September, up at these levels, but it's so far extended. What I think could be more likely is maybe a test back of 1700, something along those lines. Maybe this high volume area from last month, just something. I'm not saying it's going to happen, but very rarely does this just keep going and going. It could. That's why we use a trailing stop. But if it doesn't, you have likely levels, the value area for the current month, basically this little chunk of volume here, and then under that, this volume here from the prior month. So just protect yourself. Don't get over leveraged to the long side. It's not really worth it. That's why I bought SPY puts today. So just protect yourself. It's okay to raise some cash, take some profits, and kind of go from there. One other thing, DuPont, this position's working. It's up like 10% or something, 52.5 calls. Oh, and Yum, that was up at one point 50% today, but it pulled back some. It's up like 40% now. So still a good position that's working out. Let it work. Put your stop at break even. If you get clipped, you get clipped, but you're not going to lose any money by putting your stop at break even. So anyways, and your target is up towards 70. So anyways, take care, have a great night, and I'll talk to you tomorrow.